Fantastic. Ladies and gentlemen, welcome. My name is Scott Mackenzie. I'm the CEO of PMG Funds. Absolute pleasure on behalf of the team at PMG and our guest speakers today to extend a very warm welcome. What a cracking day today. I was woken up at 5:30 this morning by my 6-year-old to come through. She said, "Dad, what time is it?" It was 5:30, so that was me buggered for the morning. I had to get up. I went for a run on the beach, and I must say, just wandering around in a calm sort of almost autumn's morning, aren't we fortunate in the place that we live in? Just a beautiful, beautiful part of the world, really. I did notice the cruise ship over there, so if I could just have those who've been on the cruise ship in the last 2 days, just put your hand up. The boys out the back will escort you quietly out of the premises, and then we'll get on in hopefully some sort of healthy fashion. Another learned guest speaker here today, our very own Matt McCarty. Many of you know the name, head of our investor relations team. Matt is responsible and leads a team of 5 within PMG, investor relations managers across the country. And so I guess his role is to lead our personalised approach to looking after our PMG family of investors, essentially. So Matt's going to share some thoughts with you soon around the launch of our new fund. Very excited to be launching a new fund, PMG Generation Fund, and we'll talk a bit more about the whats and the whys of that shortly as well. Ladies and gentlemen, the purpose of, I guess, these events, and we're doing a few of these around the country in the coming week or so. A, we like a good road trip. B, it's a great opportunity for us to catch up with as many clients as we can, chat about their investments with PMG, but also what's coming up on the horizon. Equally, we really relish the opportunity to partner with people like Ed and bring some specialty and expertise and information to you guys. So hopefully you can make some better investment or informed investment decisions around your own personal circumstances. And so that's part of actually adding a wee bit of value in what we try and do as well. We are excited to be launching a PMG Generation Fund today. There's been probably 2 years worth of work gone in thinking about what this is about and what we're trying to achieve here. But quite simply, it's about creating and enabling access for people and all New Zealanders to invest in commercial real estate. And so a bit more about that shortly. I'd like, for those that don't know PMG that well, just to share with you a short video, just a bit of a who's PMG and what we're about. Hi there, I'm Scott Mackenzie at PMG, one of New Zealand's most trusted property funds managers. A lot has changed at PMG since we were founded in 1992. Communities have grown and emerged into bustling cities. People are busier, trying to get ahead to secure a future for themselves and their families. Business relationships once built over a handshake are now cemented by a signature. Over the last 26 years, we've been proud to have had a hand in shaping the property and funds management sector in New Zealand. Today we are the trusted partner to over 600 investors, some of whom are third-generation customers. Our experienced and professional in-house asset and property management team manages over 100 properties nationwide for our investors, providing inspiring and productive environments so our tenants can thrive. We've launched 30 investment offerings including 4 unlisted property funds, now with over 300 million of assets under management. Our unlisted funds provide our investors with diversification, conservative bank borrowings, regular income and choice. They include PMG Direct Childcare Fund, a fund which develops quality new build early childhood education properties in key locations across major New Zealand metropolitan centres. Pacific Property Fund, a company which invests in geographically and sector diverse properties. PMG Direct Office Fund, a value-add office building portfolio with properties in Auckland, Tauranga and Hamilton. And PMG Capital Fund, a private equity real estate fund. At PMG, the reason we exist is to create value and security in people and property. Our vision is to be the most trusted property and funds manager in New Zealand. We do this by fostering relationships with our people, our customers and our partners, and living and breathing our values. Working with PMG, our clients can expect us to deliver on our promises, act openly, have the courage to shape a better future for our clients, and hold a strong personal relationship with them, as these are the backbones of PMG. We manage over 100 properties nationwide. We are a New Zealand-owned funds manager, owned by the directors and a number of our team members. This makes us highly invested to do the best thing for our customers. PMG is licensed under the Financial Markets Conduct Act 2013 to manage managed investment schemes which invest in or own real property in New Zealand. Performance matters. At the end of the day, delivering results for our clients is our top priority. In saying that, building relationships with our clients is really important to us. The team and I are so confident we can add value and generate strong returns. We invest alongside our clients. But don't take my word for it. We have third generation investors who have entrusted their wealth with us as their family have done before. It's a responsibility and privilege we certainly don't take lightly. What a charming young man, that glow on the screen. Very eloquent, fantastic. We should just listen to a bit more. I had the privilege of investing in PMG some 8 years ago now, and the business was very different when I first became involved. We had a small office above Red Square in the CBD of Tauranga there, and there were 3 staff. In fact, actually there were 5 staff. When I turned up, 2 of them left, obviously didn't like me, which is fair enough. So we've grown steadily over the years, and I guess we're now at a point where we have over 25 staff in the business. As we talked about on the video, now a national presence, offices, Tauranga, Auckland, Hamilton and Christchurch. And our family of investors have grown on the back of that growth as well. We have investors right now from Invercargill right through to Kaitaia, and very proud of the trust that people have placed in us to continue on with PMG's journey. We have people in each region who look after not only our investors but also the real estate. We're now approaching something like 500 million of assets under management. So as we've continued to grow steadily, we've resourced ourselves appropriately to ensure that we continue to look after each and every one of the properties within our control or custodial control. As I talked about in the video there, our purpose in life is to create value and security for people and property. Over recent years, we've actually framed that further to enable everyday New Zealanders achieve financial freedom. And to do that, one has to invest and build wealth over time. And we believe PMG is well placed to allow that to be enabled through the investment and gaining access to commercial real estate. To do that, we need to demonstrate as a business a number of key traits. Be proactive, roll up our sleeves, not be afraid of getting on and doing what we need to do. Being innovative, not being afraid to challenge the norm and bring what we believe are outstanding investment opportunities to you, our clients, our investors. And demonstrate leadership. For us, it's about demonstrating leadership across our peers and leading from the front. And we're trying to do that more and more in all areas of our business. Over the last 5 years, we've noticed a growing demand for the type of investment offering that we have and manage. And that demand is certainly also seen from offshore. We've seen significant interest from offshore investors. In fact, over the last 5 years, we've seen just under 50% of all major transactions in New Zealand go to offshore investors, something like $14 billion worth of transactions to offshore investors. And we've certainly got nothing against offshore capital investing in New Zealand. In fact, actually, it's a good story. For New Zealand to present ourselves in such a way that we're attractive to attract that sort of capital is a good story. But nonetheless, we really believe that PMG is well positioned as a property funds manager to enable New Zealanders to get their fair share of what is a productive asset class and investment class in commercial property. So we're quite passionate about that, and that's largely why we have prepared and spent a lot of time putting together PMG Generation Fund. And Matt will talk a bit about how we're achieving that access shortly. Just in terms of PMG's strategy, so I guess you can frame our strategy into, no you can't, because I have to stop pressing the button. I guess I'll put that down so I don't do that again. You can frame our strategy into 4 boxes. So first box, really, we are and will continue to be long-term value investors. So what I mean by that essentially is we look, as you should do with real estate, to invest for the long term through economic cycles. We don't try and pick the top or bottom of economic cycles. We look for value in investing, and what that fundamentally means is we look to generate value not only on the acquisition, but throughout that asset's life cycle. So that's quite important. So with that, our strategy is to continue to build robustness and resilience with scale. Having the wherewithal that we're not exposed to any one particular geography, tenant or building, industry or sector. And that's what falls into what we call our diversification camp. De-risking it for you, our investors, so when you're participating in any one of our funds, we're reducing that risk as much as we can relative to the investment class. Equally, establishing new funds like PMG Generation Fund, creating choice for yourselves as investors. So within the PMG, stable of funds, you have the opportunity to diversify across each of those funds. Again, spread your risk even further. Alignment is the third pillar for us. And what I mean by that is, as we talked about in the video, we invest in our own funds as co-directors, and also many of our staff are invested as well. So we have what we call skin in the game. We are invested in ensuring we get good outcomes for our funds. Equally, we're quite unique as a business in that we are what we call vertically integrated. So whilst we are very good in terms of governing the strategic decisions around funds management and the managing of the money and the investments themselves, we also have an in-house team who look after the day-to-day management and work on the properties as well. So we are very close to the assets with which underpin your investments. And I think that's really important and becoming increasingly important in today's environment where things are moving so rapidly. So it allows us to ensure that we get the day job done well and make good decisions around ensuring the performance of each building and therefore the funds within our portfolio. And the fourth pillar is around access. As a business, we've invested heavily in technology over recent years to enable our clients to come on board with us in a more expedited fashion. And so you'll see with Generation Fund that being enabled, and also to improve transparency with the launch of an investor portal so you can track and see your investments with PMG and how they're travelling essentially. So again, automating the background to make things a bit more intuitive and autonomous for yourselves as investors. Matt will talk a bit about access, lowering the threshold. We've done that over a number of years now to enable everyday New Zealanders to invest in commercial real estate where otherwise that's quite difficult to do on one's own steam, as it were. So that's, for us, part of our passion to help enable. And so that's fundamentally why we have launched the Generation Fund. And you might ask the question, why the name Generation Fund? So two reasons. First is our focus is very much around generating regular and reliable income over time. And to do that, we must stick with our tried and true strict criteria that we apply to every one of the acquisitions that we bring into our funds. We focus heavily on building resilience. So what that means is ensuring that the buildings we acquire are relevant not only to today's market, but are relevant to tomorrow's market, or we can reposition them fairly readily and cost effectively. Tenant resilience is becoming more and more important, particularly where we are late in the economic cycle. And so ensuring that we've got tenants not only with good financial standing, but good leadership as well, so they can withstand the economic cycle. So if you add that all up, that essentially equates to ensuring we've got strong and robust cash flows, ongoing revenue, and therefore returns to yourselves, which is really important and underpins essentially Generation Fund. And ensuring, and why Generation Fund is the second point, is actually creating or enabling multi-generational approach to investing. So we're quite passionate about yourselves continuing to invest, but what we're more passionate about is actually helping to educate and bring on the next generation to enable them to begin to start to build wealth and create financial freedom. And so having smaller parcel sizes and the ability to, in time, invest little bits often is very much a trait and a feature we think will work well for what is the next generation as they start to build their own nest egg. It's getting harder nowadays to acquire your own house. Why invest in a residential property when you can start to invest in a productive asset class like commercial property and build wealth over time? Matt will share some figures with you around that as to what that could look like over a period of time. So ladies and gentlemen, investing in Generation Fund in our view should very much look something like this. And someone was taking the piss earlier suggesting I look like the guy in the back there. I think that looks more like Dennis. Careful. Okay, fair enough. 8 years in property management can do that to you, and I must say there are grey hairs coming through to prove it. But fundamentally, you entrusting your capital, your hard-earned investment capital with PMG, for us to then roll our sleeves up and get on and do the day job to enable you to, whatever it is, if your passion's fishing or live the life you seem fit in a passive sense, is fundamentally what PMG is all about. And so we're quite passionate about enabling that to happen and never take that, I guess, that trust for granted that you put in us when you pass your investment capital across. Ladies and gentlemen, that's all I wanted to talk about. I'm now going to introduce you to Matt McCarty to the stage. I can say Matt's passions in life are investing, golf and fine wine. Two of those things he's currently fully immersed in. The golf clubs are currently in the garage gathering dust on account of his recent firstborn child. So Matt McCarty, listen to your thoughts.
Thanks, Scott. Thank you, I suppose, firstly, Ed, for those insights, mate. One thing has got me a little concerned was commodity prices firming. As Scott mentioned, a massive commodity in my household at the moment is nappies. And I got home last night, my wife said to me, do you think the coronavirus is going to have an impact on the supply or price of our nappies? I said, absolutely not. It's a New Zealand company. They're made in Littleton. They're designed in Littleton. They plant a tree for every pack we buy. NZ company won't have any sort of issues or impacts. And she said, are you sure they're not made in China? Absolutely certain, but just to be sure, I'll go down and I'll check the packet. Little emblem on the back said, designed in New Zealand, made in PRC, the People's Republic of China. So now I'm thinking I better, rather than talk to you at the end of this presentation, make a bulk order for the next sort of 6 or 12 months. So I'm a little concerned about commodity prices, Ed. Thank you for doing that to me. Another key takeout there for me was we are living longer, we're healthier, and we're in an environment where we are chasing yield because we are probably going to have to live with lower returns for a lot longer, and that looks set into the foreseeable future. And as Scott's pointed out, PMG's business has always been about providing sustainable, regular, reliable returns to clients through various economic cycles. And as Scott also said, the PMG Generation Fund has been a really sort of long work in progress, and that's just sort of further amplifying and our sort of commitment to that strategy. And that's what I want to talk to you guys about now. Just a wee disclosure, there is a live offer in the market, and many of you would have seen it, especially our existing clients. So a product disclosure statement can be found on our website, can also be found on the disclosure register, which is essentially the company's office, and you can also get one from contacting me or anyone else in the PMG team. Another part of this, I suppose, and it's good to have the Hobsons guys here, myself and none of my colleagues will provide personalised investment advice services. I am personally an AFA, but I won't provide that service because our product range is just simply too narrow. So I would, of course, recommend that if you want some quality personalised advice, you do talk to probably Roger or David, who are in the back corner of the room here today at Hobson Wealth. Absolutely trust sort of the services that they provide. Generation Fund. I'm going to cover off a few key details, try and keep it brief. Essentially, we are issuing 33 million new units in this fund to raise the capital to acquire 3 high-quality premium industrial properties across New Zealand. Those units are available at a price of $1 per unit. I often get from new investors who are investing in our other funds questions around why do we pay $1.12 per unit for the office fund, or why do we pay $1.05? I can explain that away, there's reasons for it, but I often get I wish I'd got in at the ground level. Now this is a new fund issuing new units at $1 per unit. Here is your opportunity. The minimum investment is 1,000 units, so $1,000, and further multiples of 1,000 thereafter. Commercial property is well known as one of the best asset classes to generate long-term wealth for all of us. The issue is access. The listed property is more accessible, but we get equity characteristics in that space. What PMG wanted to ensure is that we were providing a fund which still resonated and spoke to our core investor demographic, our retiree sort of population, but also provided the opportunity for the next generations to get themselves on the ladder. And even our other funds, Pacific Property and Direct Office, at minimum 10, 20,000 multiples, that sort of rung on the ladder has just been a fraction too high. If you think those under the age of 40, essentially they spend 7 years repaying on average student loan debt, and then they want to start a family or buy their first home, investing 20 grand alongside a more diversified portfolio is quite difficult. Investing 1,000 and multiples of 1,000 thereafter is much more accessible. So this, just to reiterate, is a fund for everybody. There are characteristics, features, benefits which will speak to each of us differently. but it is designed to provide an opportunity for the younger generations to get involved finally alongside all of the older generations as well. The offer is partially underwritten. What that means is that we have a pre-subscription for a large number of these shares already, units, sorry. Okay? Gives us a high degree of confidence that we will be able to buy the real estate, launch the fund, and everybody will generate their returns. The offer is open now, and it closes on the 27th of March, if not sooner, if we're fully subscribed by that date. The forecasted distribution is 5.8 cents per unit, which at $1 per unit is 5.8 cents. Okay? 5.8%. If you compare that to, and I'm going to talk about other asset classes shortly, but it's still, if you compare it to sort of cash in the bank, a very favourable return. Bonds, as Ed spoke about, a very favourable return, and even some of our other asset classes, which I'll cover off shortly. A lot of our peers in the market now, you will have seen some of our peers in the market, new offers with high quality product. You are seeing a lower yield. There's an offer in the market at 5.75 at the moment. One of our peers released an offer prior to Christmas last year at 5.25. Both of those offers have a higher debt level, okay, which essentially adds to the risk an investor takes. But what I would caution you is if you're seeing offers with probably a 7% for new funds in the market at the moment, I'd be asking some questions alongside some of the stuff that Ed pointed out on his investment checklist. There will be a quality question mark for anyone that's issuing new product, probably 7% or higher. So just be aware of that, investors. From a tax structure perspective, like all of our other funds, there's structured as a PI fund. So these will be tax advantageous for most of us, particularly those on 30 or 33% income tax. Why? Because the top tier tax rate under a PI tax rated scheme is 28 cents in the dollar. So these are more a tax efficient way of investing. In terms of some key offer information, I've touched on a bit of this, but there's 3 initial direct properties which have been acquired and which will fall into the PMG Generation Fund. These are geographically diversified across Hamilton, Wellington and Christchurch. I'll start with the top, which is actually the middle picture. That's a property in Sharp Road, which was out by Hamilton Airport. That sort of industrial precinct out there keeps going from strength to strength. Torpedo 7 are the tenant in that building. They are the only tenant. Torpedo 7, as I'm sure many of you are aware, are owned by the Warehouse Group. The Warehouse Group in the last sort of 12, 24 months, and you can talk to the Hobson's guys for more accuracy around this, but the recently, I think, imported from the US, their CEO has changed in strategy, has really started to pay off for that business. Their financial stability and financial performance is starting to look better than what it was. I think that's been reflected in the share price. So in terms of our comfort around Torpedo 7 as a tenant, we're incredibly comfortable with them. That building was built new in 2013, I think. So we're getting a high quality asset, high quality tenant, and a lease agreement which is commensurate with that. The building on the left is in Wellington, Jamaica Drive. The main tenant there, producing more than 50% of the rent, is Coca-Cola Amatil, one of the world's probably largest recognised brands. And when we talk about, Ed was making comments earlier about when you're investing in listed property or unlisted property, you really want to look to the quality of those tenants and make sure they are essentially A-grade, known brands that are going to provide a stable revenue stream or return to us as investors. This is in Granada North, so it's actually a wee bit sort of north of Wellington City, and with very quick access to the major arterial route running sort of north and south from Wellington, which is why that precinct works. The last building on the right is in Wigram, Christchurch. So for those of you that know Christchurch, sort of more towards the airport rather than the other way. Wigram remains a very tightly held industrial area, low levels of vacancy because of access to arterial routes again. The main tenant or only tenant on that space is a company called Euro Corporation, Eurosteel. They would be, I think they're the second largest steel goods producer in New Zealand behind Steel and Tube. They essentially half owned by family owned, and the balance owned by a private equity firm called Maui Capital. Their revenue numbers are well north of sort of 100 million, very good profit margins, etc. So their stability as a tenant is looking like a reasonably sort of good prospects, I suppose. So collectively, there are 5 tenants across those 3 buildings, geographic diversification, quite a bit of scale at the outset at almost $53 million. And we're carrying about 43% debt to value ratio at the implementation of this fund. Breakdown, Torpedo 7 or Hamilton is responsible for producing the better part of the rent, about 50%, with the balance coming from Christchurch and Wellington. We strategically have sort of tried to, I suppose, go overweight logistics or FMCG. Online retail is becoming bigger and bigger, not only around the globe but here within New Zealand. So we want to make sure that our industrial properties are catering for that change in demand. More and more, and I've been using this lately, I mean the coronavirus actually could well push more online purchasing if we can't get control of that beast, because people still need goods and services, but they won't be able to necessarily leave their home to buy those goods and services. That is actually already starting to play out in China. It probably won't play out here, but just some themes there that we're aware of, that we're quite, reasons why we're quite interested to be exposed in that space. Start off talking, I've covered a little bit about this, but yield relative to other assets. So the two I haven't talked about, we know bank rates are basically very, very poor. We are seeing, I'm sure, a lot of reweighting of people's portfolios out of cash towards alternatives, listed property stocks, which are producing a better yield. If we look at the residential property sector, averaging about 3.1% gross yield across Auckland, Hamilton, Tauranga on average at the moment. As Scott sort of said, you know, why might be the question that we'd asked as to why you'd be investing in that space at the moment. Gross yield in a residential sense, landlord is responsible for rates, landlord is responsible for insurances, landlord is responsible for repairs and maintenance, etc., etc. The list goes on. In a commercial sense, the tenant covers a lot of those outgoings. So the only thing to come off our generation fund, those quoted returns at the end there, is an investor's tax. So those returns at 5.8% are net of fees and expenses, gross only of tax. The listed property, the company we use to provide us with a bit of data set for this stuff, they do an equivalent gross yield. So what that basically means is we have to calculate an equivalent gross yield for our fund, which actually works out at 6.6, almost 6.7% for somebody on a marginal tax rate of 30%. In our area of commercial real estate, we only pay tax on a part of the income, not all of the income. It gets very technical. Ask me later, or ask Nigel, who's at the back of the room, if you want to know exactly what that number refers to. But I suppose what the slide is demonstrating here is that there is a real yield advantage from being an unlisted property versus other types of asset classes. Notwithstanding, you need to make sure it's adequate, the risk for your risk profile, etc., etc. Just some key features around the Generation Fund. We do now have an online application process. We will be helping investors, not just sort of advising that you have to step through it. We'll be helping investors through that process like we always do. We are launching a 24/7 sort of available investment portal where investors can view their investments, what sort of growth they've seen in terms of percentage terms over the period of their investments. They can log in and acquire or make further investments, all these sorts of cool things that we haven't been able to do in the past. Income at the outset can be paid to your chosen account monthly. That's an important point. At the establishment of this fund, the income will need to be paid out. But shortly, or very soon thereafter, we are working on our dividend or distribution, I should say, reinvestment plan. So investors who would prefer to reinvest their distributions and get the benefit or full benefit of a compounding return will be able to do that. They'll also be able to make regular contributions often. So they can make small amounts or smaller amounts, they can contribute smaller amounts often to that portfolio. And I'll talk shortly on the next slide about some of the benefits that can provide. Our fund will not necessarily stop at just direct property. It will be predominantly direct property that it owns, but it may also take positions in other PMG funds, such as Pacific Property or Direct Office Fund. It may also take positions in listed property companies in time as well. I want to talk about this compounding sort of phenomena in investment sense. Just some case studies I put together to show just how powerful a compounding return can be. And I've got 3 different case studies which will speak to different sort of demographics in the room. The first, we've got a 20-year-old female university student, recently finished uni, and she's come out, got her first job. She's got $5,000 to put away immediately, and she can contribute $200 every month thereafter. She's got a 45-year investment time frame because she's 20 now. She's not considering a requirement for those funds until the age of 65. Her investment portfolio, starting that small, it sounds like I suppose, an insignificant sum, results in almost $760,000 investment portfolio at the end under that scenario. She contributed about $180,000 of that. The benefit of a compounding return and reinvesting her returns contributed the balance. Now, in all 3 of these examples, 2% inflation has been assumed, but no growth in the underlying value of the actual investment has been assumed. This is purely the benefit of compounding returns. Now, one would imagine, there was a slide I talked to last year, a Morningstar slide, that showed $1 invested in direct commercial property in the early 90s was worth about $7 in 2018, so 7 times. Now, whilst PMG Generation Fund might not necessarily generate that sort of growth, who knows? Nah, we're not assuming this is gross. Yep, thanks, Christine. While it might not generate that sort of growth, we do anticipate over a 45-year period that we will see good capital gain over that period of time. Now, these, again, just to reiterate, these numbers don't include any assumptions around growth and value of the properties and therefore underlying value of the assets. Case study 2, professional couple, mid-40s, 2 young children, well-paying jobs, inherited a bit of money, bang away a couple of $100,000 up front, and they put $2,000 every month thereafter. $3.55 million over a 30-year investment time frame. Again, no growth in the underlying value of those investments has been calculated here. It's purely the benefit of compounding returns. And lastly, because we're in the Bay, kiwi fruit growers in their early 60s, $1 million to put away now, but they won't be contributing any further. They're only going to compound that return for over a 5-year period, which they require it to be producing an income at that point. So we're looking at an improvement in value there of about $335,000. Shorter time frame, so a larger portion of that growth is actually reinvested returns rather than the power of compounding. But there is an element there of the actual returns on returns on returns, that compounding benefit that's attributing a bit or a reasonable sum of that. So I suppose the point here is that this is for all generations. Reiterating, you can have your income paid out monthly. You can, in time, once the reinvestment plan is available, reinvest those returns. But as you can see in all of these examples, it doesn't matter if you're here or case study 3, there is a benefit of compounding returns via the Generation Fund. So this really is for us all. In terms of how to best take advantage of that, you need to invest early, don't wait. Invest often. Even little amounts can make a massive difference, even for those that are retired or looking shortly to retire. Investing regular small amounts, even getting close to retirement, is definitely beneficial. Remember the benefits of PI. So you've got the tax advantages for the PI under the PI regime. Don't forget the compounding intervals. The more frequently you compound your return, the better off you will be. So if you compound, say, the listed property trusts as an example, which pay a semi-annual or an annual return, you're only compounding twice a year or once a year. Under the PMG Generation Fund, you can compound every month. You're much better off to compound at greater frequency and hold for as long as possible. Commercial real estate, even in our game, is not an asset which you would recycle at a short space of time. It's designed to be a set and forget strategy. Buy it, put them in the bottom drawer and forget about it. That is the best way to invest, not just for yourselves, but intergenerationally. In terms of our team, I'm based here in the Bay. Lorena and I look after investors from here across to Taranaki down to Wellington. Matt Harvey's Auckland Northland, okay, for any friends and family that might be interested up in those ways. Rory Diver's a new recruit, started before Christmas. He looks after the Waikato catchment. and Jordan Forrest looks after the entire South Island. He's got the largest geography, but he's got the smallest amount of investors too. And Mel Lowe, who is our sort of investor support. So you can actually speak to any three of us. Thank you very much for your time. Thank you.